Quick update on Intel stock, which dropped 17% today. Very volatile after earnings report. Past year up 104%, so very high growth long term, but today it dropped 17%. And the reason for that is that there was mixed earnings and cautious 2026 guidance weighing on sentiment. And you can see their earnings report. Fourth quarter revenue, $13.67 billion, and adjusted earnings per share of 15 cents, beating estimates. However, forecasted first quarter revenue below consensus and break-even earnings per share, triggering an 18% stock drop. The cautious outlook overshadowed the earnings beat, raising investor concerns about near-term performance. So overall, it's not looking good for Intel. And they also had supply constraints impact. There's some shortages and capacity limits on Intel's 10 and 7 process nodes, waiting guidance. And the company prioritized their Xeon processors for data centers over consumer products in 2026. Analysts expect supply bottlenecks to ease starting in the second quarter, but near-term challenges remain significant. And so that's not really good news in terms of their overall supply chain. For CapEx and AI strategy, they raised its capital expenditure to supply shortfalls and support demand beyond 2027. The CEO emphasized capturing AI growth by strengthening client franchises and data center strategies. The company expects positive adjusted free cash flow in 2026 despite current challenges. In terms of broader market, Intel declines contrasts with mixed tech sector performance. I don't have Intel stock, but I do have exposure through index funds and will continue to follow this long term given the impact to the data center business and the semiconductor market.